In the last 5 months, where stocks have sunk about 27%. 27% is a big number, especially when you look at comparatively to the market as a whole. If the market dropped by about 27% in a 6 month time frame, it would be all over the news. It would be screams for recession, depression. You would hear news about layoffs. You would hear news about market halts. I mean, it would just be panic in the streets. And while we're seeing definitely some headlines on software, it's not really being touched on so much compared to other news that's going on right now, which is a little surprising for me because, again, I see 27% dip and I'm like, wow, that's a pretty significant drop in such a short time frame. So let's break it down a little bit and what that means because so many people have technology and software being a part of technology is going to be in either your portfolio or at least someone you know is going to have technology in their portfolio. So with software being down 27%, it's really due to investor nervousness when it comes to AI. AI has really expanded so much so quickly over the last few years. And a lot of investors and consumers alike all feel that AI is actually going to replace a lot of these software companies. Now, software companies have done really, really well over the last few decades. And a lot of money managers typically include software stocks as a part of their portfolios. But we're seeing that a lot of software companies, because of their long tenure, have hit their maturity stage, meaning that there's not so much more room for them to grow at this point. So, with that in mind, AI being sort of an emerging market type of opportunity, being that it's relatively new. And when I say emerging market, I don't mean a small country. I just mean a market that's relatively new in terms of asset class, right? So AI is relatively new in the grand schemes of owning technology stocks. So software might be down, and this could be a reason if your portfolio has seen some drag over the last few months. This could very well be a reason why. So I would expect that a lot of money managers will be rotating out software stocks in favor of AI and other technology. Some money managers might feel that this is a buying opportunity because now that these companies, their valuations have gone down because of their stock price, private equity might swoop in and buy a lot of the companies outright, which could bolster some of the stock prices of the companies being bought out. So it's really tough to say where things are going to end up. But I think it's very interesting given the fact that now we're sort of diversifying. There's technology, and now there's software, there's AI, there's microchips, there's all sorts of different areas of technology that can either boost or remove some growth from your portfolio potential. So if this is something that you want to discuss further, again, you're always welcome to reach out. And I look forward to talking to everyone next week.